Renovating a home without your money.
You're watching and listening to GTR, Gary Talks Real Estate. Stories told by Realtor and Investor.
Welcome to another episode of GTR, Gary Talks Real Estate. You know, when you've been in the business as long as I have, you get some interesting insight and experiences both on the investor side and realtor side working with clients. And today's story is all about renovating our purchases, our homes, with other people's money. I love this idea. There's so many different ways to look at it. And again, as buyers, I want to remind everybody, as buyers, we're always looking for opportunities. We're always looking for solutions, right? And why not use one that's out there, one that the banks provide with us? So here's the story, and one that I was really, really happy to be a part of. Here's the situation. We were looking at purchasing a home, a fourplex, I believe it was, for $250,000. Yeah, it was a few years ago. Bear with me. For $250,000, and it needed some updating, which was, types of properties that we're always buying, where we always want to look to add value to the homes that we're buying. And one of the ways to do that is, of course, through renovations. And there's a great mortgage product out there. So instead of buying a home and having to come up with all this extra cash and do it yourself and finance it yourself, why not have the bank finance it for you? So the program that's out there for many Canadians is Purchase Plus Improvements. So you go get your mortgage and the bank is willing to finance your improvements. How cool is that? Purchase Plus Improvements. And I know over the last many years, the mortgage industry has changed a lot of what you are able to do. The rules have become much stricter on financing and qualifying and so forth. However, this product is still out there, and you just need to be able to work with a great mortgage broker that understands it and looks out for you and looks out for your best interest. And in this situation, we had that very thing. We had a mortgage broker that was looking out for our best interest. And the way that the mortgage product worked in our case, and at the time, the banks were giving us up to 10% of the value of the value of the home towards renovations. Up to, I believe it was up to $40,000. So we purchased the home for about $250,000, as I said, and we were expecting to get about $40,000 back to go renovate the home. And at that time, the home needed a couple of new bathrooms and some paint and trim and so forth. Maybe I think some kitchen cabinets and so forth. So the way that the lending works on this is you have to go hire a contractor. They'll do the quote. You have to provide your quotes and everything like that to the lender, and the lender looks at it and approves it. And how do you get your money? Well, you got to put your money your mouth where your money is, I guess, or the money where your mouth is. And what we do in this case is we will go and do the projects that we said we were gonna do on that quote. So a couple of bathrooms, some paint, some kitchen cabinets, and so forth. And then when we are completed, the bank will send an appraiser to verify that we had done the things that we said we were going to do. So they're not just allowing us to put the money into our pockets. And in fact, we don't get the money until the appraiser approves on it. And when the appraiser approves on it, our lawyer, who has been holding that money in trust for the bank and for us, gets the notice from the lender and forwards that money to us. So that's the short story of how it all works. However, you might say to yourself, well, Garrett, $40,000 does not go a long way in renovations. Well, it can do when you look at it from a different perspective. And I'm going to give you a couple of different perspectives on perhaps if you had more than the $40,000 renovation. So in this case, our $250,000 purchase, we were buying the home with a joint venture partner, where the joint venture partner provided all the financial resources and the mortgage qualifying to go purchase the home. And we explained to them that we're going to be putting in extra funds to go renovate the home. And in about 2 or 3 months' time, we're going to get a good portion, $40,000 of that back. So joint venture partners looking at this opportunity thinking, this is pretty good. I know I have to put money forward in order to get money back, but my ROI is certainly going to look fantastic when we look at it from this perspective. And that's exactly what happened. So we purchased this property with a joint venture partner. Just as I said, it was great. And you might be in a situation where you're looking at a home or a property that's going to require $100,000, $200,000, maybe even more, $300,000 or $400,000, and you're saying to yourself, "Well, this purchase plus improvements is great, but I need a lot more money, and we want to go renovate this." What do you say then? Well, we're going to get into this much deeper, but that's when I would use the BRRRR method. So you go purchase the home with conventional financing or private financing. You use your own funds or your joint venture funds to go renovate the home. And then within a year or 2 years, you have a beautiful new home with new units in it or what have you. Yet you know you've added value to that home. Go refinance it then and get as much as that money out, much as your renovation money out. That's the BRRRR method in a fast, quick nutshell. And we're going to talk about that much more in future podcasts. Remember, when we're looking at purchasing homes, we want to purchase them. We want to know how we're going to buy it. And this is the most important one, according to this episode, is how can we add value to it? We added value by renovating and updating the home, which allowed us to update and increase the rents that the home was previously getting. So this is a good scenario. Purchase plus improvements. Ask your mortgage broker about it. Check out our last podcast where I told you and I explained how we bought our first 3 investment properties using VTBs and joint venture money and 0 of our own money. Bye for now.